go over that really quickly again. So we have our market philosophy, and our market philosophy just means that we have the banks and an algorithm that takes price from point A to point B. So the way I see it is the banks are going to place their orders at a certain area. And you guys know obviously how market is supposed to look like this. We're in an uptrend. It's supposed to be high, low, high, higher, low, higher, high, right? But let's be honest, the market has never, ever, ever looked this clean. When we're in a real market condition, we look something like this. And then we do it again. And then sometimes you can even. So this is like a real market condition here. And what we have to realize is this area in between right here is all just created by this algorithm to throw us off. Because if market moved as cleanly as we have it over here, then everybody in this world would be like a multimillionaire. Because it would be as simple as, oh, I see the pullback. Let me just pull up my Fibonacci. I see the pullback. Oh, we're at a certain level. And then I'm just going to buy and let it ride out. But no, the market is designed to throw us off and show us exactly that it's not this easy. Right. So now that we have this philosophy of the banks and the algorithm are the market mover, let's get into explaining what a market mover is. A market mover is essentially the factors that go into the market that allow price to move in a certain way that we can develop a strategy based off of. So sometimes we have a bank holiday, and this is really important because when there's a bank holiday, now we're missing a piece of our market mover. Now our strategy, the chances of it working are less. So even last Thursday, I took a loss on a trade. We had a Euro bank holiday. I ended up taking a loss on a trade, and it's because that piece of the market mover that was in there was no longer in there. And you don't know exactly how the market's going to move at this point. Yes, you have your edge. You can see how price action is moving. But at the end of the day, price action has to match up with the market movers because they're the ones creating it. So a lot of price action we have to understand is just the algorithm throwing us off. So you have to be able to identify your real market highs and your real market lows. So let's get into this. I believe I have a couple diagrams I want to show you guys. Okay, so everyone understands this is our perfect market condition. We have a downtrend, we have consolidation, and we have an uptrend. This is supposed to be textbook how the market moves, right? But all of us know it never moves this cleanly, especially when you're on a lower time frame. Like look over here, just for example, the first piece of market data I pulled up. This looks nothing like one of these areas. It looks all choppy, we're moving up, down, up, down, up, down. So we have to be able to identify which areas in there are the real areas to look at. It's kind of like this, how we just had that last diagram that looks like this. The market's going to create a lot of areas to throw us off. So let's get into a drill. It's this real highs, real low drill that I like to do with a lot of traders to show exactly how to avoid getting caught in the middle areas, which aren't real highs or real lows. Well, first, let's identify a real high and a real low. The real high is going to be the last point to get traded above. And then this makes your real low the last point or the lowest point was at before. Can't type. Who's drawing on that? Okay. Let's talk about our real high. Okay, real highs and our real lows. So let's get into it right over here. Okay, I'm gonna have two green boxes to identify our real highs and our real lows. Let's bring it back to here. So our first real high is going to be right here. And I'm going to place it because now I have a pullback candle to show me, okay, price started to slow down. So this is my real high. And my real low is going to be the lowest point where price was just at to create this. Well, it's over here. Now, you're going to see price is going to do everything in the middle. It's going to do all this stuff in the middle. And I want to show you guys. I like to highlight this middle area as well, because this area is considered a trading range. And trading ranges are just designed to throw you off. Everything in between your real high and your real low is just a trading range, and that is only there to confuse you. Because once again, the market is designed for us to fail. So the algorithm will do stuff like this in order for us to get confused in the market and fail. Now we've created a new high. We've wicked above this point. So my real high is going to be over here. And like I said, the real low would then become the area, the lowest point that we just traded at before the price pushed up. Okay. So market had pulled back to down here before we pushed up. So now this is my real low. Okay, now it's doing its own thing, but I'm not even paying attention to this because this is all in a trading range. Now we've broken it. Okay, so now we broke the low. Where was the last point that price reached? Over here. And I'm just going to wait for a pullback candle to mark my new low instead of having to continue to move it all the time. So here we go. This is my real low, my real high. Everything in the middle is a trading range. Does that make sense? Does anyone have any questions on that? No? Okay. Now watch. And we have all this going on, but I'm just simply avoiding it because it isn't my real high. It isn't my real low. So I'm just avoiding it. So this is how you go from seeing, because when you actually look at the market, you're going to see it like this, right? You're going to see something like this. You're going to see something come up to here and then start messing around, and then you're going to see it push higher. So when you're able to identify that the new high and the new low can be identified as it's just as long as I wick above, then I consider it my new high. Body close is like stronger confirmation, but as long as I wick above, I'll count that because price still decided to break past that area. So I hope that makes sense. That was one of the questions. So when you're able to identify that this is a trading range and that this area is a trading range, you'll then know, you'll be able to look at the market as if it's like this. We have a question. How do you identify your main trading range and your ulterior range? I'm just, like, what do you mean? My main trading range is just like based off the, are you talking about this? The trading range is essentially just the areas in between our real highs and our real lows. And you can do this drill on different time frames depending on what you're going for, because as we know, there's 3 different types of traders. So we have swing traders, intraday traders, and scalpers. And all these different traders, they have different strategies. So like, for example, I like to do this drill a lot on the 5-minute because I consider myself more of a scalper, and I'll do it on the 15 and sometimes on the 2-minute. No, it's okay. Like if you guys have questions, it's cool. But here we go. I'm just going to do a couple more on this drill and we'll move on. Okay, now we've wicked above. And I'm still waiting for like my pullback candle. See, this is all still one high. I don't like set my high until I have at least one pullback candle, because then it shows me that price is actually starting to slow down. So now that's my high. And then the lowest point where price was at was right here. So now that's my low. And everything in between here is my trading range. Okay, now we wicked below. So then this becomes my trading range. I mean, that becomes my new low. My trading range will be in here. My high will be the highest point that price pulled back to. Now that was our pullback candle. So our stops, I mean, our real low would have actually been right there. And then we broke up under it, right? And off that real low, we hit pull back to here. And now we go over here. Okay. So does everyone see how this whole real highs, real lows things works? Is it making sense? All right, perfect. So now that we have this, I want to show you guys the actual pattern I look for every single day in the market to take my entries. It's the order block creation pattern. So I have a diagram of it right here. Let me show you guys exactly what I'm looking for. Let's make this a little bigger. So I want you guys to have this pattern on your notes, whatever you're keeping notes on, make sure you write this down. So this is our order block pattern. So essentially what we're looking for is for price to be in a certain type of trend, like over here, we're in a downtrend, okay? And then price reaches a point where we break structure, signifying us that we're gonna be moving in an uptrend direction. And the lowest point, you'll find your order block candle. So the order block candle should look a little something like this. If you guys have seen my YouTube videos, you've seen how I mark them up. You've seen how they look. But if not, it should be a candle with a nice body and about equal wicks on each side. And this just shows us this is where price is going to react off of, most likely, to continue to push for further higher. So you can see here, we have a break of structure. And at that point, I'm looking for my order block candle. And what's really, really, really important is if I have a bullish order block like this, I need to have it as a bearish candle. It has to be the lowest point. So the lowest point of the market would have to be the bearish candle and for a bullish order block. And you can mess around with the timeframes to find out exactly which one it is. So this is it. And then if price continues, now we have that same order block concept, that lowest point off of this new low, except it's our supply or demand zone, which continues to push price higher. And each time we continue structure, we form another supply or demand zone, which are really good for scaling into your entries. So I'm showing you guys the diagram now. I want you guys to write it down, get it down, and then I'm going to show you an actual example in the market. Same thing here. Low, high, higher low, higher high. So it's a bearish order block. So as we know, a bearish order block is going to need a bullish candle. When we break structure, now I'm looking for the bullish candle within here. And now and then at that point, I can set my limits for it. Okay. And then we continue structure. Now I have a supply or demand zone within here that I can see price will most likely pull back to play off of. And why is it most likely pulling back to it? Because we have an algorithm that has to fill in those areas. Everyone good? Everyone have this down? Yeah, COS means continuation of structure. BOS equals break of structure. If you guys need to take a picture of this, go ahead. Just do whatever you need to do to have this down. All right. Any questions on this before we move on? Nope. All right. Move this. You can ask your question. So I want everyone to understand this really quickly, is that we have 3 types of traders. Swing traders that hold positions for like over a week, sometimes even longer, sometimes 2 weeks, 3 weeks. Essentially, they're looking more on the weekly, daily, and hour 4 time frames. You have intraday traders who are looking for maybe to hold their position for a day or two, take price from point A to point B like that. And they're mainly looking on daily, hour 4, hour 1, and sometimes just to break it down into the minute 30. And you have scalp traders who hold positions for a very short time. It's very in and out. Most of my moves as a scalper, I'll look at the 5 minutes, see the way we're moving, and then find a 5 minute to a 1 minute entry based off of that. I've even seen people trade off of the I'll even see people trade off of the freaking 30-second time frame, which Lawrence asked if I trade even if it's against the higher time frame. So the only time you want to trade against the higher time frame is if you're able to identify that we have areas that need to be filled into on the higher time frame, and you're not trying to trade against it to the point where we're breaking structure there. But what you're trying to do is you're trying to trade against it to the point where you fill in the area on the higher time frame, and then you can continue to sell off from there, like or take the opposite position from there. It's riskier, so you should definitely back test it and understand what you're doing at that point. But when you know how to do it, you can do it. Does the OB have to be in the very last of a move or a very high of a move? Yes, it does. The way I use them, yes, it does. And yes, and the order blocks, they work on any time frame, really. Like, so let them align. Sometimes you'll find an hour 1 order block. Like, this is the best thing to do. You look on like a higher time frame. Yeah, Lawrence, that's correct. To trade it towards an imbalance. But sometimes you want to look on a very high time frame, like the hour 1, the hour 4, find an order block we're playing off of there, and then scale down time frames. Okay, now find a 15-minute order block that was just formed. Now find a 5-minute order block within that was just formed. You'll get different entries, all with the smaller stop loss. And then you maximize your risk to reward. You use a Fibonacci as a high time frame confluence. So I don't use Fibonacci personally. Like I haven't used the Fib retracement in like over a year. I don't like to use it with this. I just see like where price is pulling back to. And in my head, if I understand that the price has to pull back to a certain area for this algorithm, that if price has to pull back to a certain area because we have this algorithm, then I don't need the Fibonacci to see like, oh, what level are we in? I'm just looking for it to reach this certain area. And if it doesn't, then okay, then that just wasn't a part of my trading plan, Let's see, I have something I want to show you guys. All right, guys, let me show you an example of a really, really, really good order block. And order blocks are all about patience, right? So I'm going to show you. So here we are on GBP AUD, right? And this is on the hour 4. You can see right here, we have a break of structure. The second you have a break of structure like that, where you're changing, where you're shifting on the overall higher time frame, now you're looking for, now you can instantly set your limits. So this is an hour 4 candle. So my limit could have been this big, and whatever, that's fine. But that's a 1 to 5, which is still a really good trade for other people. But if you refine it down, now you're looking at a 1 to 30. So let's go to that. Let's go. Oh, my bad. Let's go to the hour 1, right? Okay. Now on the hour 1, we're able to refine it down to here, right? Now on the 15-minute, you look, okay, how does the order block look on here? And you're able to refine it down to that. right? And then when you have an hour 4 order block that you're playing off of, if you really want to refine it, I suggest not going lower than the 15-minute. Because at that point, you kind of need to get lucky. And I'd rather just have like a safer entry, because when you see that break of structure, all you're looking for is to set your limits, right? That's the main focus at that point. You can set your limit. So it's getting into something that people get confused about. Say, okay, well, price pushed up, right? Let's say price pushed up here and pulled back and then continued structure. All right, now a lot of people say this. So they say, oh, do I set my limits here at this order block? Now, the only reason why we're not setting our limits there is because we never came back to touch the original area. So I can mark up this zone as an order block, but what I'm waiting for is extra confirmation. So when I see this zone like this, what I'm waiting to see is price to come back down, tap into it, and then create a break of structure within this zone. And then now you can take it off an order block from there. But you could not just blindly set a limit. The only time you can blindly set a limit is the original order block, because you have that confirmation that algorithm still has to pull back to this area. So right here, without seeing an extra confirmation, I don't know. It's not telling me, okay, price doesn't want to move back down. It's still telling me price overall wants to move back down to this area. Until I can see that extra confirmation that we have a break of structure or something, or an order block being formed within that zone, that's the only way price will tell me, okay, I don't want to reach this, like the lower area anymore. We're going to move from here. So you have to listen to what the market is giving you, not what you want it to do. So missing entries on refining them, it's all about finding out like exactly where, you know, it's about looking at a smart refinement. And even when you miss an entry, the supply and demand zone then gets formed, you know, depending on which way you're going, but they get formed and you don't really miss out on much from there, because if those are being formed, now you have another entry to take. And sometimes those entries are even better than the original entry, because they'll offer you a smaller stop loss at times, and now your risk to reward can be better. So like, look, so on this trade, we had no confirmation here, and then we had this pullback and we push price higher, but there's no confirmation there playing off of that zone. So now the only area that gave me a proper confirmation was down here. And you can see price taps into there and then goes up to there. So break of structure is essentially when you have a high, like I'll show you. Let's go back to that diagram, right? So break of structure just means if we were in a downtrend, that's our structure. We're in a downtrend structure like here. And we have a candle that breaks the last high we had on a downtrend. Now that shows us, okay, now we're creating higher highs, because as we know, downtrends is a high, low, lower high, lower low, lower high, lower low, right? So that's that structure. So in order to break the structure, instead of having another lower high, we must create another higher high instead. So now we have that break of structure. Same thing with here, right? We know uptrend is low, high, higher low, higher high, higher low, higher high. And it just continues that way. So in order for us to have a break of structure, instead of seeing another higher low, we must see a lower low. Does that make sense? That was one of the questions. My multi time frame analysis is I want to look for something on a higher time frame and let it align with a lower time frame. So you always want to move with macro structure if you can, you know, if that fits in with your trade. So like, check this out. This was a trade I had, right? So it's simple. The institutional candle is essentially that order block pattern that I'm looking to create my entry off of. That's what the institutional candle is. Everyone else can see my screen, I believe. I don't know what's wrong on your end. You're saying, yeah, so the break of structure is because we've broken the current trend. We've broken that structure and we're creating a different type of structure. Now at this point, I'm only scalping, but like I used to intraday as well. And I'll see how I feel about doing that again. So for example, guys, look at this area over here, right? I have, prices moving higher and higher. And then over here, this is my last low. And you can see I actually learned a lot from Track Effects. Maybe that's why I remind you of him. So I have a break of structure right here. And then now I can blindly set my limit for this hour one order block, right? So let's say I have my limit up here and I want to target the liquidity resting down here. So I can put my short position there. I don't want it to distract from the whole screen. But that alone, without any refinement, like if I target the liquidity down here for more of a swing type trade, or let's look at where price just was. So that's a 1 to 21. Okay. And that's just off of, I was patient and I waited for here. And let's say I just looked for the lowest price the lowest area where price went. That's still 1 to 16. So it's like, you can see over here, this over here is matching up with that institutional candle I had. We have a nice body. We have a wick on both sides, and it's a bullish one for a bearish order block. Why is this order block valid? Because we had this break of structure right here. So I can initially start off by setting that, right? And now, as we know, I like to trade. I like to scalp. So this indicator right here. So somebody asked, isn't it safer to put our SL out of the zone, the order block zone, because of spread? So yes, essentially what you want to do is accommodate for spread. But if this is the end of my order block, I don't want to be putting it up here, because once price wicks through my order block, all that does is it tells me it's invalid. So if it wicks above, it tells me it's invalid. Yes, technically my stop loss is higher because I'm accommodating for the spread, but it's not actually like I'm looking to close out here. No, it's just I'm looking to close out right here if price reaches it right here. Any tips on taking profits and adding entries? Yeah, so profits, look for the last area where price stopped at, because that's liquidity just resting there. So you can see there's all this liquidity resting here. This is where price stopped to come back to the order block. That could be your first target. Adding entries is definitely based off of those supply and demand zones that I showed in the first diagram, and we'll get into that. So look, so this is our first entry, right? Now I like to scalp. And so I have a very simple strategy. I don't know if you guys have seen the YouTube videos, you guys understand. I use this Asian range Nico 948 indicator. And I look, these are my settings. Okay. And so what I do essentially is I wait for price to get over here to break out of the Asian range, like we do over here. And then I wait for an order block to be formed. So I actually had caught this trade, and I'll show you. So over here, price wicks above, right? And I have my low is over here. So I'm waiting for a break of structure to happen right here. I'm waiting on that. Now I can see this 5-minute candle. I'm waiting for the pullback to identify my real high. And now I have that pullback. The recording should be available to everyone in the group. As long as you're in the group, you'll get the recording. Because somebody said they're having trouble. So now I identify, I need something that looks like my institutional candle. So this 5-minute one is a good body, has a wick on top, but there's no wick on the bottom. So then I go down timeframes. I'm looking at the 4-minute now. Okay, this one looks really clean. So let's highlight this area right here. Okay, and then let's do institutional candle. Let's look at the 3-minute. The 3-minute looks ugly. The 2-minute looks ugly. So I'm going to stick with the 4-minute one. And now I'm still waiting on that break of structure, right? Before I can set my limit. So now we have that break of structure. So I can set my limit here. And what some people like to do is they like to put the entry off the body and then the stop loss at the wick, which works, but I just do wick to wick personally. The breaker structure is here because as we identified our real highs and our real lows drill, right? Now we have a real high and a real low. So we're looking for the real highs and the real lows to be identified to take the entries off. Okay, and in this trade, I have this higher time frame bias that okay, we just played off a 1 hour order block. So price is already looking to push further down. This is how I trade. You know, because I do like to scalp. Sometimes I don't even need a check because the algorithm is going to move, you know, when I get the right trade, the algorithm is going to move within my direction. But here I know, okay, now we're in an hour 1 order block. So I understand like we're looking at target further down. So I can be using those same targets within this trade. And trading, guys, like I know a lot of people want to complicate trading and say all this and all that, whatever. But guys, trading, make it as simple as possible. Whatever makes sense to you, go with it. Make it work. Like, don't make it complicated at all. If something makes sense to you, stick with it. So you can see we're tapped in. And just like that, price is moving. Now look at this. So we talked about those supply and demand zones being formed. Now, this area, yes, price did technically pull back, but you can see we kind of flatlined. It's just like a flat box right there. I don't like this as a supply or demand zone. It looks ugly. And then you can see it's not even clean. Like the highest point within there is a bearish candle. Okay. Anyway, sorry. You can see over here though, price gives like this nice curve upwards. And we have one candle that sticks out that now becomes our supply or demand zone, right? So this is my first area that I'm looking, if I want to scale in on, I can scale in from there. Now, my stop loss for this trade could then be moved to the entry for my second trade. So worst comes to worst, right? If I get stopped out on this trade and lose 1%, all that shows me is that the algorithm now doesn't want to move in my favor, but I have my stop loss on my first entry at that same area. So I've just caught 3.8% on one trade and lost 1 on another. So I just made 2.8% off of just being smart with the algorithm, you know? But let's put our targets back down. So once we have that continuation of structure right there, I identify this is my order block and I place a short position from here. And then you can set that same target down there. Now this one's giving you a 1 to 34. You know, so it just shows, okay, maybe I missed the first entry because I wanted extra confirmation. Well, let's be smart and find a second entry. All right. And price is going to keep moving. But because I have that idea that market has to pull back to this area to continue its structure, I'm just going to leave that limit there. Okay, so here we get tapped in. All right, everyone can see that. And now when price is starting to get choppy like this, like watch. Now we have another breaker structure right here. The low of this candle is 820. The low of this candle, so we're still waiting on this breaker structure. Now we have a breaker structure, right? So now we have an order block that just got formed within our order block. So let's say you missed the first 2 entries. Now you're looking to see what's a smart way to get into this trade. Do this with the stop above there. So I explained this area over here doesn't look like a good entry to me because price is just flatline. Because somebody just asked. This area over here, market creates like a nice dip upwards, and then it continues to push back down. Just like that, this entry is now in profit. So me personally, I'll risk about 1% a trade. Now watch this. When market is moving choppy like this, you can even get into like the minute one. But whenever I trade the minute one, I'm looking for an extra confirmation. So for example, like you'll see right here. Right. So we had technically this zone over here, which this price latch. So whenever we create like an order block on the 1 minute, I'm waiting for price to latch onto it, continue its structure, and then I'll get in off the second one. So now price, when we get this continuation of structure right here, I'm now setting my order block over here. And now I'm not saying you're going to take 6 trades on the same pair of 6 scalings because, you know, that's just greed. What I'm saying is if you missed out, the market will always present itself with another opportunity. So you don't have to revenge trade. You don't have to mess up your psychology. You don't, guys, like I wasn't a profitable trader until I learned how to control my emotions in the market. You know, I had all the technical analysis in the world, whatever. And you can have all the technical analysis in the world and study all the technicals and everything. But it's not until you get your psychology down that trading actually clicks to you. Yeah, Reggie, I'm gonna send out the recording. You guys can see, like, let's say you want to hold to liquidity. You have a 1 to 34 here as a scaling. You have a 1 to 42 as a scaling. You have a 1 to 110 as a scaling. If you analyze for scalping, you are not checking the trend on the higher time frame. No, I am, but it doesn't necessarily mean that I need to go, that I need to like be trading with it. And yeah, that's Reggie from the OG group. Got a couple OGs in here. So like, for example, this trade, I had my higher time frame bias because we had this like hour 1, hour 4 order block that we tapped into. So you enter with the break of structure or wait for the candle to close. No, I'm not entering off of a break of structure. The break of structure allows me to set my limits for my order block. Apply for the funded 10K one. Okay, so somebody is asking about like what I used, because when I was at FX Summit, the forex conference, they had a challenge where you get 5 trades to flip an account to as high as you can get. And so pretty much I took a 10K account and in 4 trades I flipped it to 1.1 million. And so I mean, obviously you're not looking to do this on like a normal account because you're not looking to risk all 10,000 of your dollars, but it was within the rules, so I did it. But what you have to understand is I was only able to do this because I was looking at my order blocks and looking at the market algorithm to see which areas are going to give me the least drawdown. I'm not forcing my trades. I wasn't forcing my entries. I'm being patient. The more patient you are with the market, the more you'll be rewarded. Some people think, oh, I'm patient. I missed out on a 1 to 5. I missed out on a 1 to 6. I missed out on a 1 to 7. When you're patient, you're going to get rewarded with that 1 to 30 in the market. And the mindset is understanding that trading is a journey. Like you have to understand exactly, there will be losses. Nobody has a bulletproof strategy, and you have to stick to your trading rules. So I'm not telling you guys to trade my strategy. My strategy works. Trade my strategy. I'm not saying that at all. What you have to understand is everybody has a different set of rules for themselves. For example, we have like retail concepts and smart money concepts. Both of them work. I like smart money concepts a lot more personally, right? And that's what I trade based off of. But I'm not going to tell somebody, hey, go look at this, go do this, trade my style. I'm right. I'm never going to say that, because essentially that's never going to work for someone. If it's my strategy, it's my strategy for a reason. If it's his strategy, it's his strategy for a reason, because that's the way it clicks in their brain. So This is exactly, somebody's asking what allowed you to move from a failure to a profitable trader. So this is it. So it's understanding that everybody's going to have their own trading strategy. You're not trying to copy somebody's strategy. You want to learn the concepts. Well, for example, me, I learned a lot of smart money concepts, and I took those concepts and developed my own strategy. Now, you guys, by watching the videos and being here at this webinar, you're learning a lot of concepts, and whichever ones fit best with your personality as a trader, take those and apply them and develop your own strategy. Trading isn't about there's a right way, there's a wrong way. No, it's about your personality. Who are you? I'm a person who wants to be in and out of the market. I want to be in and out like that. I want to set limits. I want to be able to go do whatever the hell I want once I'm in my trade. So I set limits and I scalp. Like I want to be in and out like that. Does strategy work in all pairs? Order blocks works with all pairs. I personally have narrowed it down to 4 pairs that I trade because I use this strategy, the scalping strategy. I feel like it works best with these 4 pairs. So I do that. But guys, let's hold off with the questions for a second. Let's get back to the chart. You guys can keep typing questions. I'll answer them just in a bit. But as we were saying here on the minute 1, now we're waiting for price to enter us. And just like that, now we have our minute 1 entry. And you can say, okay, maybe price will continue down. Maybe you missed that one as well. Maybe you want an extra confirmation. Well, who knows? Sometimes you won't get tapped in, but let's see if this one does. See, this one gets tapped in, almost gets stopped out, but this one keeps moving further down as well. Looks like our entry is right here. And our stop loss is right here. So my 4 pairs are GBP USD, GBP CHF, GBP AUD, and GBP JPY. Does it work with all sessions? So overall, higher time frame bias with this will work with all time frames. Like if you want to use order blocks on 1 hours, like if I'm gonna go on all the other time frames, I'm going on the 1 hour, and that's where I'm starting, and it works perfectly like on those. But if I'm doing the scalping strategy with the whole Asian session, I'm waiting for a break and a break of structure and all this. I'm mainly just sticking to this time frame, to these 4 pairs. And as you can see, go on higher time frame. See price just continues to melt. Boom. The reason why I held this so long is because I have my higher time frame bias. The price is going to melt down here. Algorithms already showed me where it wants to fill into, and price can keep moving. So guys, this just shows you, right, that with patience, like if you're, as long as you're patient in this market, it will help you a long way. So for example, this break of structure happened back in early April, right? And I could have set my limit and walked away and came back 2 weeks into May, and now I'm tapped in. That's if I wanted to trade that higher time frame. The way I like to trade on the higher time frame is like that. Like I will leave it. Same thing with the GBP AUD trade I showed, right? Was it here? No, it's not this one. Same thing with this trade, right? This break of structure happened early April, taps in early May. Now that's fine. But that's just that's like, it's about the patience of it. So I'm trying to get back to where we were right now. Or GBP CHF. Where the trades would just go. Okay, guys, I want to go over this really quickly. It's just to go over our trading sessions. So we know we have Asian session. So there isn't much volatility for most pairs. There are pairs that do move in Asian session. Like I know Anthony told me CAD JPY moves crazy in Asian session. I just personally don't like trade Asian session. And we have London session. I believe nice moves happen during London session, especially with GBP pairs. And the way I see it is, okay, we have London banks. They want to move the London pairs. New York session, US banks want to move US pairs. So this is back to our actual market conditions and avoiding the ugly. So a lot of people will look at something like this in here. And they'll say, okay, we had this low and we created this break of structure. And then they'll set their limits right here. And then they'll get stopped out. And the reason why they just got stopped out is because they weren't looking at real highs and real lows. Well, if this is my real low and this is my real high, then I got to be looking at only those two. And so then I can set my limit when we break structure at my real low, not at the fake break of structure that's designed to throw us off. So make sure you guys have this stuff down. The trading ranges are there to confuse traders, and anything in between a real high and a real low is considered a trading range. This is literally the biggest concept like I can teach out there to help clean up trading. Because then you're able to avoid all the confusion within the middle of the market. Let's see. One sec, guys. So guys, let's take a break from the whole technical aspect real quick, and let's just talk a little bit about psychology, right? Okay, perfect. Perfect. I just got a question about psychology. How do you save yourself from FOMO and over trading? So a lot of this stuff, if you're lacking confidence, the reason why people have FOMO, which is fear of missing out, and over trading is because they have a lack of confidence within their self and within their trades. So a lot of people are thinking, oh, I want to make money. I want to make money. I want to make money. Let me go trade. And trust me, like, oh my God, I've done that a billion times. And I promise you every single time I just got destroyed doing that. And it's important to understand that it's okay to not trade for a certain day. You know, I used to have this mentor. His name is Hunt. He's a really, really, really good trader. Learned a lot from him. And he used to literally make me. Yeah, Anthony said, don't have a broke person mentality. But yeah, like honestly, that is what it is. Like the more you try to overtrade, the more you try to force something, the less it's going to work. And so it's like Hunt used to tell me, he was like, don't trade for a week. Prove to yourself you can't trade for a week. And I would literally go a week without trading. And then he's like, okay, don't trade for another week. Like don't enter a trade and study and watch how it goes. So backtest your strategy and watch. Think of all those moments where you would be impulsive. Think of how it actually worked out. You know, think of all those losses. Make sure you record all your trades, write them down, have a trading journal, have something to show you why you just got slapped in the face by the market so you can remember it. Because you can't keep doing that and then forcing yourself to lose money. Over trading, well, dude, why are you going to overtrade? If you're up on the day, go take your profit and go to sleep. You know, I just showed you, let's say you missed out on a trade. If you're patient, you catch a lot better. You catch a lot better moves within there. As long as you're patient. Yeah. So even, let me find this freaking setup we had. So now I'm getting kind of annoyed. I'm like, where'd it go? I know it was this setup, but I don't know where it went. Like I know we just had it marked up as something else on a different one. don't know if I just like went blind. Here we go. Okay, like for example, right? So we had this over here with our bias. And so it's like, okay, the first entry, let's say you take it all the way down, gives you 1 to 65. Let's say you missed out on that one. You decided to be more patient. Well, as long as you're more patient, you can catch. This was a 1 to 110. And the 1 to 110 appeared twice, actually 3 times, because there was even a different 1 minute order block that I didn't play off of. But it's like, when you see stuff like this, you have to understand, like, okay, if there's money to be made like that in the market, why don't I start to make it? You know, when I was at FX Summit, I was talking to this guy. And I remember he said this. He said, you want to know when I became profitable? And I told him when. And he goes, when I told myself, like, I'm tired of losing. That's when I became profitable as well. You know, I was really, really, really annoyed with losing. I was like, dude, how much money am I going to keep putting in these markets? You know, let me stop giving up all this money to the markets and let me start making my own money. Let me figure out, okay, I'm tired of losing money. Let me stop giving it up. Let me find the higher probability setup. Let me stop taking those dumb impulsive moves when I know I shouldn't be taking it, but for some reason I want to take it so badly. I want to take it so badly, but I know I shouldn't. Let me stop taking those. Hold yourself accountable within this market. Somebody asked, do you check the fundamental side or do you have trust in technical? I think fundamental is like 1% of trading. And I think 9% of it is technical. And I think 90% of trading, 90% is psychological. Like I even have this book called Trading in the Zone. I mean, by Mark Douglas. I recommend this to all you guys. If you guys are struggling with psychology, read this book, mark it up, do exactly what you need to learn everything in that book, because it helps you a lot as a trader to grow. How do you overcome greed and the need to win? Even more, how do you deal when you enter a losing streak? So greed and a need to win, target liquidity. The second you can start targeting liquidity, you will never be hungry in the market, because then you have a real target. Why are people hungry? Because they're looking at numbers. They're looking at, okay, this number, my profit is running up, my profit is running up, my profit is running up, and that's greedy. When you target where the money is resting in the market, then you're able to understand, no longer do I need to look at numbers. I'm looking at the point that's going to make my trade invalid. Once we reach here, my entry is invalid. Sure, it might move my way, but my entry is invalid at that point. Let's take the money and be secure. How do I deal with entering a losing streak? I trust myself. You know, I ended off last week's market, you know, I like not the way I wanted to personally, like, but what I did is I have this understanding that, okay, sure, let's say I go down 10, 15%. Say I just lost 15 trades in a row. I know that all it takes is that one good setup to set me so far ahead. That's why I'm confident in my trading style, because I look at my risk to rewards. So I know that I can take one winning trade a week and I can lose 9 other ones. But it doesn't matter. The one winning trade could be a 1 to 20. Every single loss is going to be 1% because I have proper risk management. And now I'm up, you know, 11% on the week. I'm happy with that. Let's see. Somebody said, how do you filter out bad trades even if you have a break of structure? That's why I want to look for real highs and real lows. And also I want it to be like kind of like a smooth push upwards. What do I mean? Excuse me. What do I mean by smooth push upwards? I mean, like, I literally want to see market push up like this. Like we just pushed up. I don't want to see us have like a very choppy, like in itself like this, and then create a small break of structure. I don't like that. It works sometimes, but those ones are the less probable ones. What type of liquidity am I looking for? What does that even mean? Like liquidity is liquidity. Liquidity is, I'm looking for a liquidity point. Where is price stopping? Where is a retail trader looking to buy or sell off of? Where are they? So for example, retail is all about support and resistance, right? So they're all looking at this area as a support. Now, if we have all these retail traders looking over here, then yes, that's support. So somebody said equal highs. Yeah, exactly. Equal highs, equal lows. I have all these equal lows over here. I see price just came down from there, whatever. This is all money that's just resting within this area. Retail traders are saying we're going to buy, 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 buy. So all those people who are holding their positions who bought over here are about to get stopped out. And that's my target. You can see how perfectly it comes down to back test this strategy. You'll see back test your strategy and set liquidity target points for yourself. You'll see that's where price moves to. Why? Because the banks want to take people's money. Any other questions on anything psychological? Somebody said prop firms. What does that mean? Like my thoughts on it? I think prop firms are a great way to trade somebody's capital without having any risk. If you can pass the test, why not? If you can pass a prop firm test, definitely go for it. I recommend. How often do I take a break? Like from trading in general? I trade very simple. I trade within my time zone. I trade Sunday to Wednesday. That's all I need. I trade a certain type of I trade only after Asian session ends is when I'm starting, and that's it. Yeah, I started forex about 2 years ago. Guys, let me cover something with you. Let me cover the same, because I feel like a lot of people get confused with scaling in, and I really want to make it like as clear as possible, right? So for example, when you're scaling in, you're going to see something like this. Okay. Let's look at this, guys. Then you have your order block. Okay. So second, we break this structure here. Okay, so the second we break structure there, what we're looking to do is set our limits at the bottom. So that's like first entry, right? I personally don't use Wyckoff. Somebody just asked if I used Wyckoff. No, I don't. And yeah, the strategy works with every pair. Order blocks work with every pair. It works really nicely on higher time frames, hour 1, hour 4, and stuff like that. But yeah. So for example, right, we have this over here. Of our order block. As soon as I break structure, I set my limits. As soon as I continue structure, I set my limits. Now, this is where people get confused. It's something like this. Is when we have something like this. Right? So we have our continuation of structure. And price doesn't reach our order block before we get that continuation structure. Now, what I'm looking for in this type of situation is for something like this to happen. I'm waiting for price to come into here and show me that it wants to push higher, do something like this. So that way I can enter off of it. The only reason why I'm waiting on that is because if it doesn't show me this, then price is most likely still coming back down to the original order block. even though we had a continuation of structure. If it doesn't show me this part, then you'll notice more often than not, price will just melt right through that supply zone. So this is a way to save yourself from a loss. Does that make sense to everyone? The only way you're taking that extra zone is if you have that extra confirmation. Something like that. A high probability setup for me, I'm looking for liquidity resting on the like as a target. Like if I'm in a sell, I'm looking for liquidity resting at the bottom. I'm looking for an imbalance. I'm looking for voids to trade. I'm looking for gaps in the market. I'm looking for stuff like this, to go within the market, you know. Void is pretty much just an imbalance. It's like a void is a set of candles that are like on one, like watch, like technically this is a void. On the hour 4, we have just straight blue candles running up. That's a void or an imbalance. It just depends on who you learn it from. Essentially, the market wants to come back down and trade into this area, which is like a really good confirmation. What are you using to time when the market will push up? Take out, like, what do you mean to time it? Like, I don't know how long it's going to take. I just watch what price is, showing me. Anyone else have any other questions? Okay. Let's look at this. And he shows a top-down analysis. This question was from before. Yeah, let's do it. Let's get a clean chart. All right, watch. Do you always look for reversals back in the Asian range? Yeah, like I'm looking for the break of Asian range to target the other side. Like even here, you can see we break lower, we go high. We break high, we go low. This one doesn't break, just goes one way. Break high, go low. Stuff like that. All right, I feel like time frame do you suggest we start? That depends on what type of trader you are. Like, but I mean, 4 hours is always a nice place to start. Like, go 4 hour and break down lower. If you feel like you need a higher time frame than that, then go higher. But I always like to look at recent market data. I don't care about like what happened way back when. I like to look at, okay, what are we looking at now? If it fits on my screen, I want to look at it. Does that make sense? All right. I know I showed you guys this one, but let's do a top-down analysis of it, right? Let's bring market back to here, to where we initially break structure. So we have our break of structure right here, right? Everyone sees this. So now that we have a break of structure and it's on the 4-hour, I can set my limit to right here. And you can see we don't really have a wick on the bottom. So this isn't the best order block. So what do? I go down to the 1-hour. On the 1-hour, this is better, but there's still kind of no wick on the bottom. I'm going to the 45-minute. Same thing. 30-minute. Same thing. 15-minute. The 15-minute gives me a lot lower of an entry. And as I say, when I'm trading off of a really high time frame, like an hour 1, an hour 4 type of order block, I'm looking to only refine it down to the 15-minute, because yes, you can go lower, but it doesn't always work. The 15-minute is the one that gets tapped into the most when you have a higher time frame background. So back to the 4-hour, right? This is exactly how I took this trade. So I had my limit set here. Now price shows me, oh, we might be dropping back down. And then we push higher, right? So let's say I have an order block within here. Let's just say, okay, because this is what some people see. They get confused. They're like, oh, I have an order block everywhere. Okay, every night I honestly look at the 5-minute first, personally, because I scalp. I scalp and I already know kind of what's going on. But stick with what works for you. Yes, I'm completely fine with you guys asking me how I work and what I do and whatever, but stick with what works for you. Let's just say this is another order block. Same thing. This one needs confirmation. Regardless, I'd want to refine these down to something that has a wick on both sides. See, this one wicks right through it because we didn't break this high here. So I didn't get that confirmation I needed. The only way I would have had this confirmation, right, is if we broke this high before we continued down. So if I would have set this limit blindly, I would have been stopped out right there. Why? Because we have high, low, market pushes up, doesn't take out my high, and then it crashes down lower. So I would have been completely stopped out on this trade. Yeah, sure, maybe you could have caught some risk to reward if you took this blind entry, but overall, I'm overall getting stopped out on there because this, first of all, is only a 1 to 3 for 125 pips. That's horrible. All right. Not only that, it didn't give me my confirmation, and I'm targeting the liquidity. Where's the money resting? I can see we have money resting over here. Look how flatlined this is on a 4-hour. There's a lot of money resting over here. There's a lot of money resting over here too. Price just fell from here, which means this is worse that the sellers came in. So this one was stopped out. Boom. This one gives us no room for a confirmation and stops us out. You can see that clearly. So right there, there's 3 entries we possibly have. Now this one, the only reason why I have my limit set is because it's the lowest point. So in my head, the algorithm wants to reach here to push price higher. Here, look, the sellers kicked in again right here. And you can see we literally wick in and fly. And you see all this liquidity like building up. If you see this, it's smart to like move your profit to there. Let's say you don't. Let's just see how that plays out. I mean, we have so much consolidation here. So much money is literally just being built up right there. There's a lot of money here. This isn't a bad target. Even if you said, oh, I want to take where price just fell from, it's a good area. Stuff like that. Does that make sense? Yeah, and that's good. If you would have taken partials at 50% to your TP, honestly, I would have as well. Like I'm looking for areas where I can take partials and then areas where I can close my overall trade. Does everyone understand why this was my target level? And you can see we have the liquidity resting here and the liquidity and then the wicks over here. Yeah, you could be looking up here. But when I did take this trade, I looked for it right here. And you can see there's even more liquidity resting up here. Like overall, this could be another target that we trade into. You know, we have liquidity resting there. We have a gap within here. That needs to get filled into. So maybe we're looking to trade even up to here. You know, it's all about looking for the smart money targets, not about greedy. Honestly, I don't recommend buys to sells, but they do work if you know what you're doing. For example, we have this right here, okay? Remember, real highs, real lows. I just had a break of structure right here. Fair value gap is just like a gap in between two wicks in the market. So it's like this wick to this wick. FVG, fair value gap. It's also known as insufficient price action, IPA, just depending on who you learned it from. So you have your break of structure down there. Now you have your order block within here. This is if you want to do some sells to buys type stuff. I don't think this one gets tapped into all the way up there. Oh, it actually does. So look. So you had this break of structure. You could have had your limits right here. If you do want to do sells to buys, it's tough, but and then you could target where price just fell from, and then overall where your buying position is. So you could have gone like this. But you have to understand overall, we broke a higher time frame like trend over here. We're moving upwards. But yes, I can still take that to trade into my buy position. Does that make sense? And within these moves, like, you know, I wasn't strictly waiting for GA to play out this one move. Like I still used my scalping strategy on several days for this trade. And I just still had that limit set over there because I know the algorithm is going to shake us off. And you said you're 17 right now. Do I think you could be profitable in the next year? Dude, you can be profitable in the next 3 months. It's just all about putting in the time. Like I started forex when I was 17. I'm 19 now. Like it's all about putting the time in and really, really, really giving it what you can. It's like I went from being 17 years old, taking a bunch of really bad courses to being 19 years old, and I'm starting to teach people so that way they don't have to go through that trouble of going through those bad courses and all that. Guys, also I want to point out something. Another good target is looking for a potential rejection order block. So technically, let's say that this was a supply zone, right? Let's say that I wasn't looking at the sell to buys like that seriously, and I didn't understand that I'm in the, like, this is the right market. I could target into here as a potential rejection order block. Anyone else have any other questions? What is the expected win rate with the 1 minute strategy and other confirmations? Okay, if I use the 1 minute, first of all, you need to let time match up with price. You need to know, like, okay, you need to look at what session you're in, how is price moving, where is your overall target? Okay, that's the first step. Those are confirmations you need to look for. Now, whenever I use the 1 minute, I don't use an initial order block. I trade off like the second supply zone to be formed because I need to understand, okay, the 1 minute is heavily moving in this direction, because the 1 minute is constantly going to change. It's so easy to have a breaker structure on the 1 minute and for it to just fool you out. The 1 minute can literally do this, right? You could be here, create a breaker structure, and then just go there, and then go there, and then go there, and go there. So what I need to see on a 1 minute is this. Let's say we're in a downtrend. Okay, come here, break above, tap onto the order block. I'm not entering there. Then it goes higher, and then I could potentially enter off this one. But if it goes higher, I'm definitely entering off of here. So you have your order block, then your first supply, and then your second supply or demand. And I'm usually entering off this one on the 1 minute. The win rate is all about how disciplined you can be, you know. But when you have a really good risk to reward, you can get away with having a low win rate. Especially on this 1 minute. If you find the right 1 minute entry and you're able to target an area all the way to its final liquidity, you can catch 40, 50, 60% on it. But make sure, guys, I want to make sure you guys understand, if I'm catching a 1 minute entry and I want to hold it to an hour 4 target, the 1 minute entry has to be within the lowest point of the hour 4. Yeah, guys, even somebody just said I don't know if he meant send it in a direct message to me, but he said 20% win rate is good enough when you're going for 1 to 30. And that's true. Like, your win rate is enough to keep you alive and make still good money. Somebody asked any tips for passing a funding challenge? I say use 0.5% risk. Don't use a 1% risk on a funding challenge, like, because you can get these really big risk rewards. The thing is, if you're not too sure with it, you can lose a lot of trades, and you never want to miss an entry because you're about to hit your daily drawdown. Anyone else? Confirmation do I use to validate that a zone will hold? I'm not sure I get what you mean. The zone, like, if my zone, like, I'm just looking for how overall, okay, I guess the confirmation you're asking is that real highs and real lows. If I get my real highs and my real lows, that gives me, like, that's the confirmation that I'm looking for a break of structure out of my real high or my real low. Yeah, Anthony, I got you. I'll show the difference right now. Like, you mean like the diagram or on a chart? Yeah, I got you. There's actually, so let's go back to this GBP-CHF trade, right? It's essentially the same thing, just at different points in the market. So this over here is my order block, and the order block is essentially just the first zone to be formed. And then let's see, like, let's just go down to the scalps I had right here. Right, because you can see it really clearly on here. This area is a supply zone, or a supply / demand. zone. And the reason why it is because we've already played off the order block. And so the secondary levels aren't considered order blocks because order blocks are the moves that come off of breaking the structure. So the supply and demand zone, it literally is an order block. It's just like considered like a zone this time. It's considered a supply or demand zone because this is the new area where people are looking to short off of. Because if you think about it, an order block is basically supposed to be where the bank's money is. So they're trying to protect that at all costs. So if there's going to be another area to scale in, it's going to be off of a supply or a demand zone. So that's the only difference between the order block. The order block is always the first point. The second point that's created to continue structure down, because now we're not looking at a break of structure, but we're looking at continuations. Those are considered the supply or the demand zones. Does that make sense? Sure. Is it better to take the OB that grab a lot of liquidity? I mean, yeah, definitely. Like if I'm in an order block, I kind of want to see it clear like some nice liquidity before it. You asked me to watch a YouTube video and then explain it. Is that one of my videos or what? Which video is this? Okay, so this was GU on the 6th of May. Where's the eraser tool? Yeah, I can never find that thing. Okay, was it this trade? Bank levels? I don't use bank levels. Like I just keep it as simple as possible. Like this is exactly how I trade. Exactly what we've been over today is exactly how I trade. Any of my YouTube videos is exactly how I trade. Have you tried risking less at the edge of a supply zone, like near a stop, loss for crazier R to R? No, like once I'm in, I'm in. You know, I'm not looking to like enter in the middle of. If I got my entry, I got my entry. That's like a personal thing. That just depends on how risky you are. If you want to add another entry to it, but with me, my discipline and my trading plan, I just don't. How the fuck did I end up in April? Sorry about that. Okay, it was the 6th of May. Okay, it was this trade, right? I don't think I had like an R4 bias on this. Yeah. Okay, so hour 4, right? You have this big void, imbalance, whatever you want to call it, over here. Yes. You can see we wicked off pretty hard right here. We're looking for an area to come back to trade up into at least maybe a bearish order block or something that we have to target on the higher side or liquidity. So, you know, on lower time frame, you can see this good liquidity over here. Now watch this. So when we were on the 5-minute, right, dropping out of here, I was able to see that this trade right here is melting out. And first of all, now we've created this void in here. So I can tell, okay, once we get a sign that we need to trade back up, it's most likely going to trade back up into at least here. And I can see there's no highs over here. There's nothing to break my structure. And I don't want to wait till all the way over here to catch an entry. So this shows me now I have a confirmation that on the 1-minute, we're able to look for what's going to work out. So here we have our low, this OB. My bearish order block was right here, right? and then price pushed up above this high because we had just traded below here, pushed up above this high, and you were able to take a long position right there and target this to at least here for a 1 to 11, and then you could have kept trying to see. So you can identify this as dynamic liquidity when you're like channeling down. It's considered dynamic liquidity. So you could try to target the top of the dynamic liquidity. And I know it's like, it's kind of hard to see on the 1 minute like that. I mean, you can see over here how price is just kind of stepping. So remember, our first target was right here to trade into here for that 1 to 11. We just took that. And then now we're trying to see if maybe we can push higher for liquidity. And yeah, just like that, we've cleared the dynamic liquidity. Now we can look to see, okay, are we going to break here? You know, overall. Yeah, there we go. But the reason why I targeted higher up like that, because to me, I trade during London session. I believe the best moves for London session come with GBP pairs. So that's why I do it. But this isn't a strict 1 minute strategy. I use this 5 minute. I use this on the 2 minute, 3 minute, 4 minute. But it just depends on what the setup is giving me as to which time frame I'm going to take. You can see this can run you 1 to 17. If you target the highest liquidity within here, that's a 1 to 16, which is supposed to be the whole, you know, background behind that. Anything else? Yes, I back tested it, but honestly, like if you want to use it, make sure you back test it and figure out what works for you. Those are your Asian breakout strategy. AMD style. I'm not sure I get what you mean. Okay, it's pretty simple. This indicator right here just shows me the range of Asian session. And it's called the Asian range Nico 948. And there's like not much more to it. I just changed the colors to purple. That's literally all I did. I just put the colors to purple, but everything else is fine. It's just to show me the Asian range. So that way I can look to break one side. So if you identify your real highs and your real lows properly, pick the lowest point out of there to show like your order block. What's up, T? Favor. Oh yeah, I got you. Of course, man. Someone just asked to show the templates for the break structures. Yeah, I will make a YouTube video on the real highs and the real lows. Not this one. Which one are you talking about? Oh, you mean like this? Or do you mean this? This list here, like, is this all you want to see? All right, perfect. I don't use trading bots now. I don't use like any indicators to show me order blocks, to tell me when to buy, to tell me any of that. I'd rather just do it myself. When you're scaling position. So the thing is, when I'm scaling my position, I move my initial position stop loss to the new position stop loss. So that trade is in profit. So I'll just risk another 1%. No problem. Yeah, the only indicator I use is just the one to show the Asian range. I don't like any other indicators on my screen. Like I just forget it. Mark up your own indicators. Yeah, use alerts exactly like what they're saying. Forget order block indicators. Exactly. Figure out how it works and mark it up on your own. Kill zones, no, I don't use. I mean, mentally, yeah, but I don't have like an indicator for kill zones. All of our percentage gains are in the chat if you want to look at those. Exactly. Somebody said your best indicators are your eyes and price action. That's exactly what it is. Kill zones are technically just times, like better times to trade in. You can look up ICT kill zones and like you'll find out those times. There's like a whole like background premise on it. Essentially, it's just like I just trade London session. Think of it like that. I'm not going to analyze Nas because I really don't like trading it. That's why I won't get into it. I have like my own thought process behind like Dow Jones and Nas. And like I understand like people like it for a quick buck and they move better. There's a lot of volatility. Sometimes it gives them higher risk to rewards. But when I'm catching these risk to rewards on currency pairs, I stick to currency pairs because it moves better with my setups. So I have traded Dow Jones, I've traded Nas, I've traded all that. And I know how to trade them, but I just don't like to, because to me, they're kind of like very manipulated pairs and they're more disrespectful than currency pairs. So that's why I don't touch those. No, I don't think it's a waste of time to learn anything in general. I think it's better to have the knowledge and piece what works to you than it is to not have the knowledge. The pairs I mainly trade are GBP CHF, GBP AUD, GBP USD, and GBP JPY. All right, guys, I think this has been a great Zoom. We're actually going to wrap it up here, and I'm going to get this uploaded and sent to the chat. All I ask is if you guys could leave like on it, like an honest review in that group chat that we have, because I want to be able to show people just exactly what PIP and DIP is about. So please, if you like the Zoom, please in that webinar chat, just mention that, thank you. Thank you so much for your guys' time. I hope you guys learned a lot during the Zoom, and I hope you guys really enjoyed it. I hope everyone has a great trading week. Let's kill it this week and let's keep making money. Let's go, guys.